cursor right, guys. Hey guys, what's up? There you go. Yeah. I'm here. Well, I did not even know that I was live. So I guess that I started the stream without even knowing that I did it. No, we're good. What's up, guys? Welcome back to another live stream. How are you guys doing today? Good? What's up? At New Begin 9705, Magic, Mizzy, Juan Botello, or Botello in this case, Ruben Passion, Larry Lewis, Kadiga Mohamed. Yeah, everything. Okay, we're doing good. Yeah. Take a look. I got a new mic. How does it sound? Good? I told you I was going to get a new mic. Yeah. Welcome back, guys. What a roller coaster ride we had today, huh? Unbelievable. Check this out, guys. The SPY. So, we saw today, guys, a drop of almost $7. And then a push to the upside of almost $4. Such a roller coaster ride, the one that we saw today. The bulls were able to close the trading session above the 5-day moving average. So this was a good close. And the bulls were also able to defend tooth and nail this pink line that you guys can see over here. This is the 20-day moving average. So we can make the case that we had a good close for the bulls. And when it comes to the other indices, the Russell 2000 got decimated today, guys. Went down 2.20%. The Nasdaq went down 0.63%. The S&P 500, or the SPY, went down 0.62%. And the Dow Jones went down 0.51%. So pretty much a red day across the board. And if we take a look, guys, at the sectors of the markets, I am always telling you guys about the sectors of the markets. For the most part, the 11 sectors closed in negative territory. Check this out. Energy was the quote-unquote best performing sector today. It went up 0.11%. And technology went up 0.09%. But other than these two sectors, take a look. The other 9 sectors closed in negative territory. So in pure technical terms, guys, if we take a look at the SPY, the bulls have been making a ton of progress over here. Check this out. They found support right at the 200-day moving average. This is a very important moving average, which happens to be upward sloping. So they were able to find support right at this moving average on 2 occasions. They bounced back up. We have been seeing a massive push to the upside since last Friday. On top of that, we have the 5-day moving average that as of now is, or we can see over here, I'm going to rephrase that, we can see an upward sloping 5-day moving average. And as I just told you, the bulls were able to close today the trading session above the 20-day moving average, which happens to be downward sloping. That isn't very bullish. Let's just put it that way. But they managed to close above that very important moving average. If I zoom in here, guys, take a look at this blue line. This is the 100-day moving average. I would say, this is my personal opinion, okay? But I am very confident about the fact that these two moving averages, guys, the 100-day moving average and the 200-day moving average, are, out of all of the moving averages out there that we have, the two most important ones. So take a look at how, in my opinion, I could be obviously mistaken, the bulls are kind of afraid of making a test of this 100-day moving average. I told you today on Discord, let me zoom out a bit more. Take a look. So 3 trading sessions ago, they got very close to this blue line, the 100-day moving average, and they weren't able to finally make a test of this moving average. Yesterday, they also got very close to the 100-day moving average. We didn't see the test. And today, we almost saw pre-market a test of the 100-day moving average. Let me see if I can zoom in here. Not that much. Let me see. Zoom out a bit. Let me see. There you go. Take a look. Pre-market. We were inches away from finally making a test of the 100-day moving average. So why are the bulls scared? Why are they afraid of the 100-day moving average? In my opinion, and again, I could be mistaken, since this moving average is upward sloping, it is starting to act like a magnet. And what do you guys know? The 100-day moving average as of now is signaling $439. So in terms of the potential upside that the bulls could be having, could be having in the next few trading sessions, or who knows, maybe tomorrow, $439 seems to be some sort of unfinished business. If the bulls happen to be able to burst above this upward sloping 100-day moving average near $439, this is extremely bullish. That would imply that for the most part, guys, the low that we saw last week was pretty much the low of this corrective process that we have been seeing since early September. So $439, put this down on a sticky note, is such an important spot for the bulls in the upcoming trading sessions. When it comes to the most important areas of interest of the SPY, you guys know that tomorrow I am going to be on Discord. I'm letting you guys know pretty much what to do, what levels to keep an eye on. But it would be very negative if tomorrow we open the trading session below either this upward sloping 5-day moving average, let's say $432.90, or even worse, below this downward sloping 20-day moving average at $431.60 ish. By the way, keep in mind that the new earnings season is kicking off tomorrow with the big banks. So tomorrow we have pre-market, JP Morgan, we have Citigroup, we have United Health, what else? Wells Fargo, BlackRock, and obviously, I guess that most of you guys know that no earnings report comes out on Fridays after hours. So if you guys see that any company out there is going to post earnings on a Friday, that report is coming out pre-market. And never ever, I think that this year we saw an exception to the rule with, I don't know, I think it was Palo Alto Networks that posted an earnings report on a Friday evening, but that is rarely ever the case. So those reports come out tomorrow pre-market at 8, somewhere between 7 up to 8 a.m. And if the banks, and we have very big banks posting earnings such as JP Morgan and Wells Fargo, if those banks happen to drop the ball on their reports, then you guys we can make the case that we are likely to see downwards pressure in tomorrow's trading session. By the way, and also, please drop a comment down below. Let me know what stocks you guys want me to go over. So let me know over there. And in the meantime, I need to keep telling you guys about the 10-year Treasury yield, TNX. And throughout every trading session, I am letting you guys know, or I am encouraging you to keep an eye on both the 10-year Treasury yield and the Dixie. This is extremely important. If you guys recall, I am going to zoom in here. This is TNX. This is the 10-year treasury yield. If you guys recall, I told you last week, if we happen to see TNX dropping and breaking this previous area of resistance at around 46.99 or 4.69% to the downside, this is going to probably imply some sort of acceptable relief rally for the bulls. And guess what happened, guys? When did the SPY and most of the stocks out there bottomed out? Last Friday, right? And guess who peaked last Friday? The 10-year treasury yield, TNX. So it pulled back. It broke, over here you guys can see that it broke the 5-day moving average to the downside, and it found support right at the 20-day moving average, which happens to be this upward sloping pink line that you guys can see over here. So now the 10-year treasury yield, which is the worst enemy of tech stocks and higher multiple stocks and most of the stocks out there, is bouncing back up. And as of now, the bulls are finding resistance right at this semi-descending 5-day moving average at 4.70%. So if you guys are actively trading these markets, you need to monitor both the 10-year treasury yield and the DXY, the US dollar. If tomorrow, regardless of whatever happens with the banks or with the earnings of the big banks or whatever, or regardless of whatever can happen from a technical standpoint with the SPY, if you happen to see tomorrow TNX consolidating above 4.70% and starting to push higher, this is a very but very sign for the bulls in general terms. That implies that we are very likely to see downwards pressure over most of the stocks that you guys love trading, such as Nvidia and Tesla, and you guys know the deal. So it is very important for TNX to open the trading session tomorrow below 4.70%, and it would be even better if we happen to see some sort of retracement down to this previous area of support at 4.53% approximately. Hold on, let me turn on the light here. There you go. And in the case of 4.50%, we are talking about a previous support back from late September. In the case of the DXY, check this out, guys. This is the US dollar, and I am about to go over the stocks that you guys are letting me know about in the live chat. So what did I say last week? Keep an eye on the US dollar. If the US dollar happens to break this area around 106, 106.50, this is going to probably imply some sort of relief for most of the stocks out there. What happened, guys? Take a look. The US dollar peaked on October 3rd. It started to drop, and this really contributed to the rally that we have been seeing in the SPY, the triple Qs, and stuff like that since last Friday. But what happened today? The US dollar, the DXY, went on an absolute tear, guys. It went up 0.72%. The bulls were able to recapture the 5-day moving average, the 20-day moving average, and as of now, they are making a test of a previous area of support at 106.58 approximately. This is a previous support back from early October. If tomorrow you guys happen to see the DXY, the US dollar, consolidating above 106.60, 106.60 points, and starting to go higher, this is this is going to be very but very negative for most of the stocks that you guys trade. So, long story short, you need to get familiar with the mechanics of the markets, with the mechanical part of the markets. And remember, the DXY and the 10-year treasury yield in the current conditions of the economy and the markets, both of them are inversely correlated to most of the stocks that you guys trade. So if I want to buy calls of the SPY, whereas I see the DXY and TNX, the 10-year treasury yield going higher, that's a red flag. On the flip side, if I am telling you guys on Discord, watch out for this level. If the bulls can consolidate above a certain level in the SPY, and at the same time, you guys see the DXY and TNX dropping or retracing, that's a green flag in order to go long the SPY. Or on the flip side, if you guys want to short the markets, because I told you like, hey, if this support happens to be broken to the downside, puts are on the table. And you see that level, that area of support being broken to the downside, whereas the DXY and the 10-year Treasury yield are going higher, then that reinforces the let's say the argument to buy puts of the SPY. Okay, if you guys happen to have any questions about the 10-year Treasury yield or the DXY, please let me know. I have been telling you guys about these two indicators, about not indicators, about they are not indicators, about these two. Let's just put it that way. In the case of TNX, yeah, I mean, they are not indicators, but, they are, let's say, they are elements. That sounds better. That sounds more correct. They are elements that you need to evaluate throughout every single trading session. Okay. So what do we have over here? The first request of the live stream is going to be Tesla. By the way, guys, you know that I do live stream for the people of my Patreon in Spanish, by the way. So I am not competing with Chris. I do live stream throughout the whole trading session. I have been streaming since 8:20 a.m. or something like that. So at this time of the day, I am extremely tired. And if you guys happen to notice any mistakes here and there, then I do apologize for that. But when I live stream for you guys on Thursdays, at this time of the day, guys, 4:50 p.m., 5 p.m., I'm super tired. Black Zen for inverse correlation with the SPY and DXY is definitely correct. There you go. I have them both. Awesome. And you monitor them before you trade. Awesome. That's the idea, bro. Awesome. I want you when you guys join up my streams. Of course, that I know that most of you want me to break down a bunch of stocks from a technical standpoint, but I also want to take advantage of my live streams in order to educate you guys about important matters of the markets, okay, such as the mechanics. This is very important, guys. Okay, TESI went down today 1.57%, and it closed the trading session at $258.87. Tesla posts earnings next Wednesday. Okay, I'm bearish when it comes to that report. You guys know that Tesla has been cutting the prices of all of their vehicles, and I think that the automotive gross margin, which happens to be the most important metric for every single Tesla's earnings report, is going to come out very weak. So I think from an earnings report perspective that Tesla has an appointment with lower prices. However, let's take a look at the expected move of TESI for next Wednesday. Let's see. Take a look, guys. The implied move is 7.5%. So, and taking into account today's close of Tesla at $258, if TESI happens to go either up or down 7.5% on Wednesday, we are looking at, let me see, this would be, wow, a $22 move, guys. $22 move. Jesus. Get that. So this is going to be a very interesting earnings report, no doubt about it. I think that unless Elon sorry guys, happens to be able to pull out some rabbit out of the hat, such as, I don't know, announcing the beginning of the deliveries of the Cybertruck, I think that Tesla has an appointment with lower prices. Okay, in the meantime, so it went down today, and I think that it has been going lower for 2 consecutive trading sessions. Is that the case? I put up here a 5-day, 5-minute chart. Yes, it has been going lower, and take a look at this. So today, Tesla broke to the downside the 5-day moving average. So that implies that in minor time frames, sellers are starting to gain control of the stock of this company. If I pull up here a 4-hour chart and I zoom in, we have positive aspects over here. We have a semi-ascending 200-day moving average. The 100-day moving average happens to be upward sloping, and the bulls were able to defend it on 2 occasions recently in a successful way. So I wouldn't touch Tesla here, guys. I think that we are going to see profit taking into the earnings report of next Wednesday. I'm thinking, okay? Because in my opinion, and I already told you guys that, I think that it is very obvious that Tesla is not going to be able to please the markets with the current valuations, with the automotive gross margin going lower. So I wouldn't touch Tesla with call options or shares or whatever below this 5-day moving average, which happens to be upward sloping, which is a good sign. So I wouldn't touch Tesla below $262. The bull case would be the bulls consolidating, recapturing, and consolidating above this 5-day moving average, so closing candles above $262, in which case we have two potential gaps to the upside. The first one, $269, an area in which Tesla has failed at on 2 occasions this week. And I don't know if we happen to have a squeeze operation or a big green day tomorrow or in the upcoming trading sessions. If the bulls of Tesla can take out $269, then they might be potentially being able to fill a second gap to the upside up to $274. $274 they failed in mid-September, also in early September, and also back on late July. So this would be the bullish case for Tesla. And when it comes to shorting the stock of this company, guys, I would keep an eye. Let me see over here. Yeah. Let me draw a line over here. So I would keep an eye on $257, which is a level that is a bit below today's closing price. If the bulls happen to lose $257 as support, which happens to be a previous resistance back from September 5th, what do you know, guys? We could see Tesla paying a visit to this upward sloping 100-day moving average at $251. This would be in the cards. So in order to go long Tesla, I would wait for consolidation above $261-ish. And if $257 happens to be broken to the downside, I think that a visit down to the 100-day moving average at $250 is a likely scenario, to be honest with you. Let me take a look at the market structure of Tesla. So what is the supply and the demand looking like over here? Let me see Tesla Motors. So remember, guys, this is a tool that I use. The name of this website is Market Structure. Sorry, I use this tool in order to determine or in order to notice any imbalance between the demand and the supply. The demand, we are talking about, when we talk about the demand, we're talking about buyers. And we say supply, we are talking about sellers. So the market structure of Tesla is actually very encouraging. Yeah, and why? Well, because we have a rising demand that is way above the supply, and the supply is falling and below average. So I would say that actually the supply and the demand are encouraging. So if the bulls can consolidate above $261, maybe higher prices are coming up for Tesla. There you go. Esther Mackenzie, I am late. No, you're not late. We are barely, how long in? 25 minutes in. Okay. Let's move on. Okay, AMD, Advanced Micro Devices. I think that you guys took a trade on AMD today with Chris, and I think, right? With Chris? I think that I just saw him posting something about AMD. Okay, so Advanced Micro Devices, it goes up today 0.44%, and it closed the trading session at $108.79. Take a look at this blue line, guys. 100-day moving average, 100 DMA. Take a look at how the bulls of AMD are struggling a lot in order to burst above this 100-day moving average. So we are obviously seeing over here a very clear area of supply or overhead resistance. So what would be the bullish scenario for AMD, guys? Don't fight against the sellers. Wait for buyers in order to outnumber sellers before you start a long trade on AMD. So if I wanted to go long AMD, if I wanted to buy calls over here, I would wait for buyers to recapture. I would wait for buyers to burst above this upward sloping 100-day moving average at around 100. Let's just round it up, $111. And if I happen to see buyers consolidating above $111, this would be a sign that they could be potentially gathering momentum in order to fill this next gap up to $113, which happens to be a previous resistance back from late August and also back from mid-August. If we were able to take this trade, guys, the way that I am describing it over here, with AMD consolidating above $111, from $111 up to $115, you guys are looking at a 2.65% profit trade. Nothing to sneeze at. To the downside, what happens if they keep failing, guys, at $110.50? Let's say any retracement down to this upward sloping 5-day moving average. When I say upward sloping 5 DMA, I am talking about this white line that you guys can see over here. So any retracement down to $107.50 could be a buy the dip opportunity. But am I going to buy the dip right at $107.50, trying to guess if this area is actually going to act as a support? No, that's not what I am going to do. Remember, I don't buy the dip. I buy strength after the dip. So I would wait for buyers to step in at around $107.50. And if AMD happens to confirm support at that level, so if it bounces back up, I would be entering the trade at around $108.20-ish. From $108.20 up to the upward sloping 100 DMA, this could represent a 2% profit trade. So this is a good looking chart for AMD. Yeah. If the bulls can burst above this 100-day moving average and they happen to close a trading session making a higher high, this is going to turn into an uptrend, guys. So maybe higher prices are coming up for advanced micro devices. Let me take a look at the market structure of AMD. Let me see. While I take a sip of 7-Up. Come on, pull up. Advanced micro devices. Where is it at? Oh my God, where is it at? Advanced. There you go. Alrighty. Let me see what is the demand and the supply looking like over here. And take a look, guys. Take a look. The demand or buyers through the roof. And the supply is downward sloping or is falling and below average. And again, guys, the technical analysis that I am doing today and every day for you guys depends on the mechanics of the markets. Okay? So, AMD is looking very bullish over here, to be honest with you, from both a technical standpoint and a market structure standpoint, right? But what do you know? If tomorrow the 10-year Treasury yield and the Dixie keep going higher and go crazy to the upside, then obviously AMD is very likely to drop, like the markets as a whole would do. Okay, so the technical analysis that I do for you guys is subject to the general markets conditions, to the general market conditions. Keep that in mind. But from a demand and from the perspective of the demand and the supply, I can say that more likely than not, the bulls are going to be able to take out this 100-day moving average, which happens to be upward sloping, and that implies that it isn't going to keep acting as a strong resistance. So I do see the bulls taking out $111, $110.50, and keep going higher in the case of AMD. Can you short Eli Lilly? Sure. What a beast of a stock, guys. Eli Lilly. By the way, it went up today 0.86%, and it closed the trading session at $610.50. Guys, Lilly can keep going higher. No doubt about it. So the technical chart is simply beautiful. We can argue that the RSI is a bit elevated. You guys know that I don't like the RSI, the relative strength index. I think that when someone says that a stock is either oversold or overbought, that's bullshit. There's no way of effectively telling when a stock is either oversold or overbought, but we can tell that the RSI is very elevated, so we might be about to see some sort of profit taking over here. But again, the fact that the RSI is very elevated, that doesn't imply that Lilly can't keep going higher. But I think that there is a stock out there, guys, which is Amgen, that is also a potential beneficiary of this weight loss optimism. And in the case of Amgen, yes, it is also a bit extended to the upside. As you guys can see over here, the RSI is also a bit elevated. But guess what, guys? In the case of Amgen, I am going to zoom in here, we still have more room to the upside, up to $300. Because in the case of Lilly, guys, if Lilly makes another all-time high tomorrow, it is difficult to trade stocks that enter into no man's land. So Lilly closed today at 600, closed to the trading session at $610.50. It went up today 0.86%, making yet again a brand new all-time high. So say that Lilly opens the trading session tomorrow at 600, $610. The apps determining, in that case, more upside potential becomes very tough, guys. Because if Lilly keeps making new all-time highs, and I am talking about my personal opinion, guys, a stock enters into no man's land. We don't have any previous technical reference to the upside. So that's not a trade that I would be involved with. If I zoom in here, guys, I would say that we have a potential area of interest in the case that Lilly pulls back. I am going to draw a line over here. I am talking about $590. $590 is very close to this upward sloping 5-day moving average. So it is very likely to act as support in case that this area happens to be visited. We can also make the case that we have a previous resistance over here in the case of Lilly at $600, which is also, by the way, a fat number, and fat numbers matter and a lot. So $600 is a previous resistance that acted as such back in mid-September. You guys know that former areas of resistance tend to act like a new support. So a retracement down to $600 could be bought up. We could be buying the dip over here. And if this support of $600 happens to be broken to the downside, I would rather wait for Lilly at around $590 because that area is closer to the 5-day moving average. And in the case of $590, this is a previous support back from mid-September. So from $590 up to $600, this would represent a 1.49 profit trade. Nothing to sneeze at. With collapses, this would be a super trade, guys. We're talking about how many points? We're talking about almost 9 points. Yes, if you happen to nail this trade, you're going to be making good money. So these are the levels that I am going to be keeping an eye on in the case of Lilly. And full disclosure, in the case of Amgen, I'm going to give you guys some numbers. I was this close today. This close of getting calls over here. What was I looking at, guys? $284. So $284 acted as resistance in yesterday's trading session. And I was waiting for Amgen. The ticker symbol is AMGN. I was waiting for Amgen to consolidate slightly above this former area of resistance at around 285 bucks in order to pick up some call options over here. If MGen happens to consolidate slightly above 285 bucks, let me pull up here a 1 year. There you go. Take a look, guys. We have a potential next gap to the upside up to 290 bucks. You see over here. From 286 bucks up to 290 bucks, you guys are looking at a 2.16% profit trade. So if you guys happen to see MGen tomorrow consolidating above 285 bucks, I am very likely to be, you can tell that I am grabbing calls of AMGN. And by the way, guys, another positive aspect of both, by the way, AMGN and LLY, is that these stocks are trading on extremely good momentum because of the weight loss optimism. So we could see a potential situation in which the markets are falling apart because the 10-year treasury yield and the Dixie are going higher and stuff like that, and the bonds market is going crazy. But these stocks, because of the good momentum, they are doing their own thing, and they might not be following the rest of the markets. Let's just put it that way. By the way, let me take a look at the market structure of both LLY and MGen. Let me see. Eli Lilly. Alrighty. In the case of LLY, take a look, guys. The demand is rising, which is a good sign, but take a look at the supply. Remember, demand buyers, supply sellers. Take a look at the supply, guys. It is also rising and above the demand. So I'm thinking that we might see LLY retracing down to the levels that I just told you guys about. And I am also going to take a look at the market structure of MGen. I think that a test of 600 bucks is possible. I would be buying strength after the dip, so I would be entering this trade at around 602 bucks-ish. And if this support breaks, I would be a buyer of LLY near $592 approximately. This is a clear and beautiful and irrefutable uptrend. Charts like this one should be the charts that we should be trading every single day. Upward sloping 200-day moving average, upward sloping 100-day moving average, upward sloping 5-day moving average. We can make the case that LLY is a bit far away from home base, the 100 DMA and the 200 DMA, but no doubt about it, the stock of this company is under the control of buyers, so every dip is very likely to be bought up. And in the case of MGen, let me see if we have a better supply and demand look relative to Eli Lilly. Let me see MGen. Alrighty. Take a look. The demand is stable, which is a good sign. The supply is starting to rise, but it is below average and also below the level of the demand. So keep an eye on MGen. Okay. What do I have here? I have a bunch of requests, guys. Palantir. Palantir to the moon, bro. You don't understand Palantir, bro. Palantir is the Messi of AI, bro. Okay, Palantir, guys. It went up today. By the way, full disclosure, I make fun of the stock because it is extremely overvalued. But as of now, I do have calls of Palantir. Full disclosure, guys. I got December calls 2 days ago because the chart says that despite the fact that this is an overvalued piece of trash, the technical chart says that this stock is going higher. So what do we have over here, guys? We have an upward sloping 200-day moving average. We can also see over here an upward sloping 100-day moving average, and the 5-day moving average is also upward sloping. So my bull case over here, guys, is precisely this 5-day moving average. This technical chart is under the absolute control of buyers, guys. Absolute, 100%. So I'm thinking that if Palantir keeps holding $17.60 as support, and guess what, guys? $17.60 acted as support today. It acted as support 2 days ago, and it acted as resistance back on October 9th. Very important technical level for Palantir. So as long as $17.60 keeps holding, I'm thinking that Palantir has an appointment with this resistance that is driving me crazy, guys, by the way. $18.44. It's been impossible for Palantir in the last 3 trading sessions to take out this level. So the bulls failed right at $18.44 on October 10th, and they also failed yesterday right at that level. But I'm thinking that if they keep gathering momentum below $18.44, they are going to end up bursting above this level, in which case Palantir could be easily filling 2 potential gaps to the upside. $19.20, which is a previous resistance back from early August, and even better, $20.20. So if the report, sorry guys, if the trade that I opened happens to play out the way that I am thinking, I would be making a profit of either 7% if this gap up to $19.20 happens to be filled, or even better, a profit of 11% if this next gap up to $20 happens to be filled. So this is a very good looking chart, and I do believe, and I actually put money on this trade, that higher prices are coming up for Palantir, bro. To the moon, bro. Let me take a look at the market structure of Palantir, guys. Let me see over here. Palantir Technologies, the Messi of artificial intelligence. Motherfucker, the knives. Okay, the market structure looks very, but very encouraging, guys. Take a look at the demand through the roof. So buyers clearly outnumbering sellers. Yeah, we can make the case that the supply is also rising, but it's below average. When I say average, guys, by the way, I am talking about this kind of dotted line that you guys can see over here. So more buyers than sellers, and also a clear uptrend. So let's go, Palantir. Let's fill that gap up to $20.20. And what do you know, guys? I ended up pumping up Palantir on my YouTube channel. That's embarrassing. I heard AMD was going down to 101, but I don't know when. Darren Hilton says, guys, for AMD to go down to $101, we need the market as a whole to drop like a rock. Okay? And as of now, guys, we're seeing extraordinary stuff in the markets because of bonds. Take a look at these, guys, and you need to be aware of this. I am going to pull up once again here the chart of the 10-year Treasury yield. Guys, this is no joke. The 10-year Treasury yield is trading as of now at levels that we haven't seen since 2007. 2007. So you have to be aware that the bonds market is saying as of now something isn't right over here. Maybe the situation of bonds could cool off, and we have a soft landing coming up and stuff like that. But for AMD to drop down to $100, guys, we need both the 10-year Treasury yield and the Dixie to keep going higher, and the market as a whole to fall. So I cannot make the case. Taking a look at the let me pull up once again here the chart of AMD. Can $100 occur? Yes, $100. $102 is a previous resistance back from mid-March. That's a possible scenario. But for that to happen, guys, we need to see a massive drop of the markets as a whole. Okay, the triple Qs and the SPY falling like a rock, then that is a potential scenario. The chart says, as of now, that in regular market conditions, we could be seeing AMD bursting above $110. Okay. Amazing Amazon. What do you know, guys? I got Amazon calls today. Full disclosure. I got January calls. Okay, so I think obviously that Amazon has an appointment with higher prices. So in a day in which the markets fell as a whole, you guys, I told you in the beginning of the stream that we had a red day across the board when it comes to the major indices, and also When it comes to the 11 sectors of the markets, only 2 sectors were able to pull off a green day, and they closed pretty much flat. So the fact that the Nasdaq 100 and the S&P 500 went down today, and this is a very big stock market cap wise in both indices, the fact that that happened, whereas Amazon was able to pull off a green day, is very positive. So Amazon went up today 0.38%, and it closed the trading session at $132.33. This is very positive. Period. Full stop. That implies that we are seeing relative strength in the case of amazing Amazon. Okay, so what do we have here, guys? We have the 100 DMA upward sloping. We have the 200 DMA also upward sloping. We can also see over here an upward sloping 5-day moving average, and the 20-day moving average is downward sloping, but Amazon is trading as of now above all the moving averages. That implies that the bulls are in control of the stock of this company. We have a very clear area of overhead resistance at $134. $134 is a previous resistance back from late July, and the bulls also failed right at that area today. So I'm thinking, guys, that if we happen to see a process of consolidation of Amazon above this upward sloping 100-day moving average, which is very close, by the way, to this upward sloping 5-day moving average, the bulls are simply gathering momentum in order to take out $134, and maybe if that were the case, they could be potentially filling the next important gap up to $138. $138, which is pretty much my price target in order to close this trade, is a previous resistance back from mid-August. So, taking this trade from a breakout standpoint, let's say that you guys want to grab Amazon calls, or let's say, guys, that, I don't know, the futures go higher tonight and stuff like that, and Amazon opens the trading session tomorrow above $134. If you happen to see Amazon consolidating above 134.50, 135, then from 134.50 up to $138, this would represent a 2.5% profit trade. So there you go. That's my bullish perspective when it comes to Amazon. On the flip side, guys, it would be negative for the bulls, losing as support the 100-day moving average and also the 5-day moving average. So maybe if you guys see the indices falling, the Qs falling, and the SPY falling or dropping, if this support at around $129.50 happens to be broken to the downside, that's a level that coincides with the 5-day moving average. We could be seeing further downside for Amazon, maybe down to $125 approximately. Is the Amazon Prime Day the catalyst of Amazon? When is it? When is the Prime Day? I don't know. I think that it was upgraded yesterday, guys, by the way, to outperform by, I don't know, some analysts out there, whatever. And that's the reason why I think that's a reason why we are seeing relative strength in the case of amazing Amazon. Let me see, how long are we in, guys? Yeah, 49 minutes. Let me take a look at the market structure of Amazon. This light, let me turn off the light. Okay, AMZN. Alrighty, 11 and 12. So it was yesterday and today, right? Sunshine. Okay, so it already happened. Okay, but then they need to, I don't know if they are going to post any information about how did it go. I don't know, maybe if they were able to gain new subscribers and stuff like that. So that is something to take a look at. Amazon, guys, take a look. The supply is decreasing and the demand is rising. More buyers than sellers. So, and again, in regular market conditions, and I got calls today, I think that if the bulls take out 134, we have $138 coming up for amazing Amazon. Are you using SMA or EMA? Guys, look, these moving averages are daily SMAs, daily moving averages. So the difference between a daily moving average relative to a simple moving average or an exponential moving average is that these moving average show the same levels regardless of the time frame. You see? They don't change depending on the time frame. That's why these moving averages are so important. They are used by the big money in order to either sell or buy stocks. So for instance, for most hedge funds out there, losing the 200-day moving average or the 200 daily moving average, let's just put it that way, is a signal to sell out of any stock. Okay? Whereas if a stock such as Amazon is holding these two moving averages or is trading above these two moving averages, this is a very good signal for most hedge fund managers and money managers out there. Okay? So these are the moving averages that I use. I don't use neither SMAs nor EMAs. Most of you guys do, and ultimately, guys, you guys need to keep using whatever is working out for you. Okay? I use these moving averages because these are the ones that have paid off for me throughout all of my years trading stocks. Okay. SPXL, love your enemies. Bro, that's a leverage ETF that simply tracks the SPY. So if you guys are going to trade SPXL, you just need to know the levels of the SPY, which I went over at the beginning of the stream. Okay. APLD. Isn't that the inverse ETF of Apple? No, Applied Digital. Okay, my bad. I was confused. APLD went down today 1.71% and it closed the trading session at $5.17. A very choppy short, guys, and the bulls are hanging on by a thread right at this 200-day moving average, which happens to be upward, semi-upward sloping. Let's just put it that way. So I would keep an eye over here at $5. If $5 happens to be broken to the downside, we are going to have two very negative catalysts over here, guys. The 200-day moving average, the 200 DMA is going to be broken to the downside. That isn't positive. And on top of that, by breaking $5 to the downside, the stock of this company is going to be entering into penny stock territory, which is very negative for any stock out there. So this is a no touch or maybe a short breaking $5 to the downside. And on the flip side, if the bulls can consolidate above $5, then I can see over here two potential gaps to the upside. The first one up to a previous resistance at $6.60. This is a previous resistance back from late September. And maybe, why not, up to the 100-day moving average at $7.37. So starting a trade over here with APLD holding $5 as support from $5 up to $6.48. This could represent a 24%. Sorry, guys. 24% profit trade. Jesus Christ. These penny stocks, guys. And up to the 100-day moving average, this would represent a 27% profit trade. Sorry, guys. It is an interesting chart. Be careful with this level. $5 is broken to the downside. This is a no touch, other than maybe with puts. And if $5 happens to hold, who knows? Maybe this could be a blockbuster trade, guys. Take a look at the upside potential that I am telling you guys over here. Let me take a look at the market structure. That was Apple. You didn't ask about APLD, so this was TF. Did you actually ask about APLD? Yes, I guess you did. Okay. Because now I am being asked about Apple. Okay, APLD. Do I have this stock available when it comes to the market structure? No, I don't have it available. Okay, that's fine. Okay, let's go ahead and take a look at Apple. AAPL. Let me see. Apple. Went up today 0.51% and it closed the trading session at $180.71. SoFi. Okay, no problem. We are, 56 minutes in. The stream shouldn't be longer than an hour, but okay, let's do Apple and SoFi, guys. That's fine. Nope, not a problem. Okay, take a look, guys. Take a look at this blue line that is upward sloping. 100-day moving average, baby. So get this, guys. Apple failed today right at this 100 DMA, and the bulls also failed right at this area back on September 8th. Can you guys see the importance of this moving average? It is extremely important, guys. This is a widely used moving average by institutions. So, in the case of Apple, this is an easy one, guys. If we happen to see a retracement down to this upward sloping 5-day moving average, this white line that you guys can see over here, this could represent a buy the dip opportunity, or even better, if you guys want to go long Apple, if the bulls are able to open tomorrow's trading session above this upward sloping 100-day moving average, so above 183 bucks-ish, and if you guys happen to see Apple closing candles above the area, then that could imply that the bulls are gathering momentum in order to keep going higher, maybe up to 185 bucks, which is a previous resistance back from early June. If we were able to take this trade from 182 bucks-ish up to 185, this could represent a 1.69% profit trade. So, yeah, it would be extremely bullish, guys, for the bulls to recapture this 100-day moving average. So this is the most important area, the most important level that you need to keep an eye in the case of Apple. Let me take a look at the market structure of AAPL. So supply and demand. The demand is rising and the supply is above the demand, but it is starting to decrease. So buyers are definitely, guys, starting to gain control of the stock of this company. And we can tell, guys, simply because of the fact that we have an upward sloping 5-day moving average. Okay? So, yeah, the most important stock of the markets. I always love your analysis of the stock market. Thank you. Not a problem. Thank you. Thank you. What time frame you on? Over here, 4-hour chart. This is a 4-hour chart. Did you go SPY? Yeah, I did the SPY, Roy, as soon as the live stream started out. Yeah, Target, Darren Hilton, sure. I had SoFi, guys, but my bad, SoFi Technologies. It went down today 2.33% and it closed the trade session at $8.39. Guys, I don't know. You know that tomorrow we have the banks. We have the big banks posting earnings. JP Morgan and Citi and BlackRock and what else? Wells Fargo. I mean, Wells Fargo is a big bank, but it's, you know that Wells Fargo is a shitty bank. If I'm thinking, like, you know, market psychology, if the banks happen to post good earnings, quote unquote, let's say better than feared earnings, with maybe, you know, some sort of upbeat outlook, or they happen to post some sort of upbeat guidance, that could be a positive factor for SoFi, guys, because at the end of the day, this is a financial services company, right? So who knows, maybe that could be a positive catalyst for SoFi. And obviously on the flip side, if JP Morgan and Citi and Wells Fargo happen to drop the ball, then that could be that could be a bad signal for SoFi. Okay. As of now, guys, the bulls are right at a very important technical area, guys. Get this. We have an upward sloping 200-day moving average. We have also an upward sloping 5-day moving average. And this upward sloping 5-day moving average is coinciding as of now with an upward sloping 100 DMA. Extremely important area for the bulls. Put this down on a sticky note, guys. $8.30. If you guys happen to see SoFi on regular market conditions consolidating above $8.30, that could imply that the bulls are gathering momentum in order to fill the next important gap to the upside up to $9.13. This is a previous resistance back from mid-September. From $8.40-ish up to $9.30, $9.16, sorry. This would be an 8% profit trade. Extremely important area for SoFi, guys. Okay? So holding $8.40-ish, this could be a potential trade to the upside. And losing this support, maybe we could be grabbing some puts, because the convergence of if the bulls lose as support, the convergence of the 100 DMA and the 5 DMA, this could be a fact that could be potentially opening the door for further downside for SoFi. Let me take a look at the market structure of SoFi Technologies. Let me see. SoFi Technologies. Let me see. What do we got here? And take a look, guys. This is a very encouraging market structure for SoFi, guys. We have an ascending demand and a falling supply. And the supply is below average. So this stock is going to be probably on the very top of my watch list tomorrow, holding $8.30. One more question, Melanie Williams. Sure. Are you using 4 hours here for technical and shorter time frame? Let me see. For entry. No, guys. When it comes to my entries, I use the 1 day, 1 minute chart. Okay. So this is the way it works out for me. So pre-market, when I am determining areas of support and resistance, I use the 4 hour chart. In the 98%, okay, of the cases. But when the trading session is going on, the time frame that has worked out the best for me is a 1 day, 1 minute chart. Okay. If I see any stock closing candles for 3, 4, or 5 minutes above a predetermined area of support, that's when I take the trade. Okay. So for my entries, I use the 1 day, 1 minute chart. In order to determine areas of interest, support and resistance wise, I use the 4 hour chart. That's the technical chart that I use the most. I also use the 1 hour chart. I also use the daily and stuff like that. But for the most part, sorry guys, when it comes to my pre-market technical analysis, I use the 4 hour chart. Okay, target. Before I wrap it up, guys, an hour and 3 minutes. Do you guys let me ask you guys, and please be honest with me. I know that you keep an eye on my Discord channel throughout the trading sessions. Are you guys happy with the work that I am doing for you guys? With the balls and strikes that I am calling throughout the trading session? Because for the most part, guys, and I have been telling you this, I want to tell you how to fish. I don't want to fish for you guys. That's why I am not calling out specific trades. I am providing you guys with the best information that I can so you can make your own decisions. Like, hey, if they hold this support, higher prices are coming up. If they lose this support, lower prices are coming up. So, awesome. Thank you very much. Fishman, Bike Deal, CH, Loading, awesome. That's an incentive for me to, keeping it up. Alrighty, target, guys, goes up today 1.66%, and it closed the trading session at $110.80. Sometimes I call out specific trades, guys. Sometimes I do. Come on, guys. Let's be honest. Today into the closing bell, I told you, but I don't like doing it like that. But sometimes I do. So let me pull up here my Discord. So today I told you guys, if you guys recall, if they break this support, puts are on the table. Let me see. I am pulling it up over here. Okay, let me see. What is it at? Let me see. Get the up to over here. Look at the 5 DMA. Let me see. I called out a trade to the penny, guys. And I took a screenshot. Let me see. There you go. Take a look at this post, guys. I posted at 1:22 p.m. breaking $436 and breaking $436.30 could open the door for a short. I posted that at 12:46 p.m. And if we pull up a chart of the SPY, let me see. Let me take a look. Okay, SPY, a 1 day, 1 minute. Let's reconcile this with the stuff that I said. So 436.30 was a short opportunity. And I said this at 12:46 p.m. 436.30. 436.30. Take a look. Well, guys, take a look. Take a look at what happened once they broke the support that I told you about. And take a look at the time, guys. Take a look at the time. I said, and I posted, right? At 12:40 p.m. If they break 436.20, this is a short opportunity. And take a look at the time that they broke the support, guys, 1 p.m. And take a look at what happened, guys. Once they broke that support, it collapsed. So, yeah, sometimes I am calling out like very specific trades. But for the most part, my idea is providing you guys with the best information that I can so you guys can make your own decisions. Awesome. Okay, target. Let's wrap it up. Sorry. Target. Okay. Guys, I rarely ever trade downtrends. So this is a stock. This is a no touch for me. Okay. I don't like downtrends. This is a major downtrend. We can see over here a downward sloping 200-day moving average, downward sloping 100-day moving average. The 20-day moving average is also, sorry guys, downward sloping. And we can make the case that the 5-day moving average is starting to rise. So that implies that maybe in minor time frames, buyers are starting to step in over here. However, if you ask me, this is a no touch, guys, unless the bulls recapture this 100-day moving average at $127. So I wouldn't touch this stock. If you want to trade this ticker, guys, I don't know, maybe consolidating above the 20-day moving average, $111. But guys, I am not the guy to ask about a target because I don't trade downtrends. So I when it comes to downtrends, guys, I think about these kind of charts like if they were trash. This is garbage. So if I know, guys, that a technical chart is under the control of sellers, why do I want to go long over here? If the net aggregate opinion of the markets is telling me that this chart is under the control of sellers. So I would rather trade charts that are under the control of buyers if I want to go long. If you guys want to buy puts on target, then take a look. They failed today right at this downward sloping 20-day moving average. If the same happens tomorrow, if they push higher, or if you guys see target failing at bursting above $111, then that could be a short opportunity, but I have nothing constructive to say about target because I don't trade downtrends. Okay, guys, I am going to wrap it up. Thank you very much for joining me. Let's see what happens tomorrow, guys. But don't worry, I am going to be calling balls and strikes since 8 a.m. or something like that. Thank you very much for coming. Thank you very much for joining me today, guys, okay? See you guys on Discord. Bye. Enjoy the rest of your day. Bye, guys. Thank you. Thank you.